I want to welcome everybody to Black Knowledge Matters. We, as WOSE community, we meet on Zoom, and we've been doing this since the pandemic. And we wanted to have things to happen in between Sundays. That's a big gap. And just meeting with people, we came up with this thing called Black Knowledge Matters, where every week we devote a Wednesday to a specific topic affecting African Americans, something that we could gain in knowledge and perspective. And some of the people that are on here right now have been our guests, and we've had some really incredible guests. And you can go on YouTube under Black Knowledge Matters and see our previous I don't want to call them shows, let's just say sessions. All right, it's 5:05. Glad that you all are here. We'll let the stragglers come in. Of course, my name is Imhotep Al-Kabelan. I'm a minister at WOSE Community of Oakland and Sacramento. And our guest today is Brother Stephen LeBroi. And I just met him just a few minutes ago, and I'm already inspired by just his conversation, the picture that he has in the background, and his bio. And let me share that bio before we go any further. And then we'll turn the program over to Brother Stephen, and he will enlighten us with some financial information. Stephen E. LeBroi, focused, passionate, and one who delivers on his commitments. Stephen E. LeBroi is the chief strategist of the LeBroi Insurance Group, LLC, a nationwide independent life insurance and retirement strategy firm, whose mission is to close the wealth gap and help create strong cash flow assets for all his clients. Stephen is executive director of the nonprofit Millennial Banking Concept, a financial education organization that assists in teaching disruptive tools. Is that right? Disruptive tools? It looks like
yes.
Okay.
Yes.
All right. Disruptive tools for young adults to start a lifetime focus on building wealth. The author of the book, Build Your Human Equity Line of Credit, The Secrets of Creating a Lifetime of Assets in Any Economy, an Amazon #1 book in interpreting life insurance. Stephen loves personal finance and entrepreneurship and has invested in and owned several businesses. Dedicated to the financial services industry, Stephen LeBroi is a 1987 graduate of Morehouse College in Atlanta, Georgia, with a bachelor's in finance and banking, a 27-year resident of Washington, D.C., where he is committed to teaching others valuable strategies in money management and personal finance. Stephen has always felt that the personal finance, what you do with your money, is more important than the money you make. It's the wealth the income creates that sustains you and your family during your lifetime and generations to come. Stephen's mission is to correct the miseducation of the 150-year-old insurance industry and help our people to use their products to build wealth and manage personal finances while they are living, teaching us to become positively selfish about growing assets, managing taxes, and minimizing interest paid to big institutions and maximizing efficient control of your money, creating personal bank that your family can use for generations to come. And without any further ado, I want to introduce our very special guest, Brother Stephen LeBroi.
Thank you. Thank you. I appreciate you reading that bio. It always seems strange when somebody's talking about things that I've done, but I can say this: the one thing that I found is my mission is to help us, and I say us, and I mean our culture, understand this seemingly misunderstood, actually misunderstood in a lot of instances, contract called life insurance. So I developed a firm called the LeBroi Insurance Group, and it's an independent firm. I'm licensed in 40 states, and that's just simply paying for license everywhere that I find somebody who wants to learn how to maximize, manipulate, customize this contract called life insurance. The thing that really got inside of me, I think, everybody has an epiphany as to when they decide they want to do something with their career, their lives, and when they really get honed in on their passion. The thing that started bothering me is that I kept asking myself, why? Why every time I go to a funeral, the first question is, did he or she have life insurance? Why in our culture, it's always a cliche that I'm not leaving nothing to anybody? Why is it always an issue sustaining a life insurance policy? Why is it based on, our finances, and it's the last thing that why? I kept asking why. Is it different for us? And I hear it's not different for others. And the reason why I can say that is because if the insurance industry is a 170-year-old industry, somebody's benefiting. And that sparked my fire and desire to try to figure this thing out, because I just knew that, we had to have a way of our generations building wealth to sustain that and go forward. And one way is through life insurance. Life insurance is, it goes back to 1840 something with New York Life. A lot of the companies that we literally know the same names today, Prudential, Metropolitan Life, New York Life, were around back then. And I know that you guys are huge historians, and so that at that time, we were not considered in terms of purchasing life insurance. We were actually most likely the insured, which I heard someone say, and I repeat it all the time because I think it's factual. A lot of times, and I'll show you a couple references that I want you guys to take with you. The rates were so substandard for us because they expected our life to be expired quicker than most. So the rates were higher for us. Life insurance is all about life expectancy. That's why they have the actuarial scientists, those mathematicians that predict how long you're going to live. And they sell you a policy based on life and the time frame that you're going to be here in existence. It's an estimate. It's a hypothetical document that gives you the opportunity, if you have the tools, to make it build in your favor and in your family's favor going into the future. Literally, other companies that have been around have served other cultures so well with these policies that if you think about families like the Rockefellers, families like the Disneys, these are just big names. And there's written documentation on how they've used insurance to bolster their huge businesses. And most of those initial patriarchs are gone. And so 3-4 generations into the future, life insurance still existed. Now, give us some background on us. There at one point was 46 Black-owned companies. That was based off of the late 1800s, through Jim Crow, after Reconstruction, we had companies that was fighting against this whole ideology that our health was substandard and the rates were being sold to us higher than others. Those 46 Black-owned companies that you can Google today represented an organization called the National Insurance Association. They calculated that they had combined over $1.6 trillion in life insurance policies. Wow. 1.6 trillion. And I'm talking about previous to this time frame, because if you really look at it, and even some of these what I call, these insurance titans, men and women, funded the civil rights movement. They provided the funds for Martin Luther King and others because they understood that insurance is an industry that holds tons of money to invest. But the fact of the matter is, majority culture still came and disrupted our ability to have insurance. Question I kept asking myself is, why don't we know about this? Why aren't we really getting engaged in this idea about insurance, since it's such a long industry and somebody's winning? Well, we've made it to this time frame, family, to where the internet gives us answers. And that's what I was able to glean from the internet, how to build these policies, from the internet, why policies operate a certain way. Why do we get sold certain policies, which I call contracts, and I'll talk about that in a second, versus other cultures being shared that? And one of the reasons is because we only have 2 Black-owned companies left. 2. One's Atlanta Life, and I'm sure you guys have heard of that, Atlanta Life. And the other is North Carolina Mutual out of Durham.
Excuse me.
First. Yes, sir.
Excuse me, Brother Stephen. We haven't talked about this, but are you taking questions freely?
Please,
okay.
please.
We have a hand up.
Yes,
Brother
sir.
Shango, Minister Shango, go ahead.
Oh, my brother, I came in just a second or two late, but you were speaking enough for me to have triggered a question.
Yes.
And my question is, maybe some of us became apprehensive and leery about doing type of investments because, as you recall, after Reconstruction, we had something called the freedom banks that came into existence. We had a bunch of money in the freedom banks, and then lo and behold, I don't want to use the wrong word to say crackers. Some crackers got involved and literally bankrupt the Freedmen's Bank, and we lost a bunch of money in it. So maybe that's some of the reason too, we're kind of sketchy about taking investments, if you will, because of the major society could come in and we get flim-flam. That's just an observation, that's all.
No, and I think you're right on. I understand that from just looking at reading about history, because again, plenty of people had to fight to even get the rating system. I'm sure you guys have had conversations about redlining with real estate. This is the same type of redlining with insurance. And I'm just gonna, you guys can write this down if you be interested in just the name of a article. I like providing articles, books, and all kinds of information to my clients, but this goes in deep into the whole rating system, how insurance started, even how, Booker T. Washington and W.B. Du Bois, they got involved into an insurance business in the late 1800s. And, all the trials and tribulations that we have endured, and like you said, the stealing of our money through the Freedmen banking system, it hadn't stopped if you need me to pull it up again, I will. It hadn't stopped.
Please, my thumbs don't move that fast.
Okay, not a problem. I got you. I got a couple things.
By the way, Brother Stephen, your latest questioner, he's from DC.
Okay. I'm in DC, right on 13th and G Southeast. He's on mute now.
Yeah, that used to be the ghetto, but it's no longer the ghetto now, bro.
Yes, sir. But these are the things that I'm using as fuel so that we don't repeat a lot of the things that have occurred with insurance. This is what I'm trying to teach our young adults that are the adult children of my peers. I'm 58, and trying to help rewrite some of the issues that occurred back then, because now this type of information is online. Let's see. Some of the Black insurance companies from history, some of you may have grown up and seen these policies around the house. My people are from Mississippi and Arkansas. It just continues to crawl in me about the opportunities that we've had. That this is one reference material article that talks about Supreme Life. They had offices in 5 states, and we supported each other, and insurance companies represent investment dollars in our community. But again, in some respects, the advent of the integrational movement, took a lot of our Black companies away. Even now, just as a note, Magic Johnson is looking at buying Atlanta Life. And, he also owns a large percentage in Equitrust company, is a white company, but he's the majority shareholder. But we don't have a big presence. So it's my opinion that we have to write the right policies, because we're being shared and sold policies still today. I wrote my book based off of 2 books that I read and information that I gleaned. One is called, if you'd like to write it, Money, Wealth, Life Insurance. And I will certainly send anybody an e-copy of that. And this particular article, I'll send you a copy of this article. Most of my practice, Brother Imhotep, is reference material first, because if we don't learn these contracts,
yes,
we just buy them and we put them in our file cabinet and we just pay for 50, 60 years and expect that contract to do something for us at that time. What I always talk about when I talk about contract versus policies, contract law, when it comes to life insurance, is settled in the courts. So when you sign a policy, at the end of that policy, it's going to tell you where that company will mediate with you, or what state that company will create a situation where you'd have to go against them in court. The policy is a contract. That's why it lasts so long without being changed by the government or the politicians. It's a contract. So what we're trying to gain is knowledge on what to ask for in that contract, so that, one, we benefit when we're living, because currently there are living benefits in life insurance, meaning you can have access to money if you become ill from stroke or heart attack, if you're on chronic medicines, or if the doctor gives you 24 months to live terminally ill, you can pull money from these current type of policies, and some of you may have them, to care for yourself, pay for medicines, pay, for whatever it's for. It's called risk management. And the idea around this contract is, how do we put in it what we need to have in it? I get questions all the time. Can I only buy one? No, some of these folks that I follow have multiples. And I'm sure you guys are aware of that. People have many life insurance policies. Some people decide that's where they want their funds, because a lot of life insurance policies currently will pay you interest on your money. Some has standard interest. Those are what we call whole life. Some have variable interest, which is a product that they're selling now to everybody, called index universal life. And so a lot of times, and I'll talk about this, and I think this is more controversial than anything, because there probably maybe some people that have insurance licenses on this call, but I'm here to help the culture. Agents were set in place between the carrier or the company and the customer to sell life insurance and make money. Every agent makes money based on the life insurance policy they sell. I want you guys to understand that. So it's not their job to always share with you what the real benefits are. And if they're thinking about getting rich by selling insurance, more than likely they won't. Each policy also comes with a buyer beware type of packet, so that you're responsible for reading this contract.
Let me ask you, Brother Stephen, and maybe you're going to get to this, and if you are, just take it at that time. What about term life?
I will talk about that, and I can talk about it now because I know how time flies. So the product mix is pretty much the same. What happens is the products nuance over the years. A lot of things they sold back in the 40s and the 50s and the 60s, they have the same names, but they have different components, different pieces to it. And the whole game, in my opinion, is that insurance is about strategy, because we buy it today, but we use it down the line. So we need to be thinking about down the line. So term insurance is just what it says. Most people say it's renting insurance. It is very inexpensive compared to other insurance policies. Inexpensive. And you get large death benefits or face values. These companies will offer this in a situation where it will replace income for your family in case an income earner or the income earner passes away. But statistically, they know. Remember I said actuarial scientists, life expectancy. They know that a large number of people will outlive the term. So term means 10 years, the price stays the same, 15, 20, or 30 years even, the price stays the same. And after that term, the price starts to go up exponentially annually. So it is my estimation that I'm getting ready to get, this is a real case. I bought a 20-year term at age 33 when I was not aware of any of this. I'm 58. I'm preparing to get rid of it because it does not convert, and I'm not going to pay the increase in price. The $150,000 term policy that, in talking to some of these other people in the industry, other cultures, my family just lost $150,000. So now I have to buy a new policy at 58 and not at 33. Remember, insurance is based on age and health. So I'm on blood pressure pills now. I was at 33, I was still an athlete. So they calculate that in the new price and my age. So my price for that same 150 may not want it. But term is like renting insurance. It's priced so that it's very inexpensive, and it gives you the impression that, okay, I got $1 million for $20 a month, and it will pay out if you pass. So none of the products are bad. I hear people will say, what's the best product? There's not a best product. It's what your strategy is at the time. I've had clients that get permanent products. So permanent products would be whole life, universal life, index universal life, and variable universal life. Variable universal life means that some amount of the money that you put in the policy goes into the stock market. Universal life means that a percentage of the money you put in the policy earns interest. Index universal life means a percentage of the money that you put in the policy earns interest, but it's not in the market. It's based on what happens in the market. And a lot of companies are selling that today. Whole life, what we considered a flagship product, been around since the beginning, is a product that everything in that product is pretty certain and guaranteed, where there's compound interest, there's again those living benefits. If we create a policy like we talk about today, we create cash value, which is a collateral component to a policy that you can borrow against. And I know people hear that. Can I borrow against the policy? It's against the policy and not borrowing your money. All of these policies have really certain definitions, and that's what we go over as my clients operate with insurance. Did that answer your question?
Yes.
Okay. I try to. Sometimes I go overboard, but please stop me.
No, that was a very good explanation.
The other thing I really want you guys to understand is, in life insurance, since 1912, has been given a tax code. We know that most everything we do in this country is taxed. They're talking about it now. Raise the debt ceiling. I'm listening to them talk about it now. Life insurance has been given a tax code that allows for the money that's earned in a policy, the money that accumulates in a policy. That means permanent policies, because your term policy does not accumulate any additional cash. So your permanent policies accumulate cash. Those dollars inside that policy, based on a tax code, are considered tax-free. Tax-free as it grows, and how you pull the money out or borrow against it, tax-free as you use it. If you withdraw money from a policy, you possibly will be taxed on it, because you're eliminating the ability to put that money back. If you borrow from a policy, you can put that money back and borrow it again. And guess what, family? The loans are private. They do not get attached to your credit. They do not call you for collections if you don't make payments back. They do not bother you. You do have an interest payment, but if we show you how to strategically use those dollars to take care of things like purchases, debt, you're borrowing money for your business, managing money during poor economic times like the crash in 2008, the pandemic. Most people don't understand that life insurance sits underneath everything that we do. And
now let me ask you, that sounds, what you just explained, that sounds good. Am I listening? Am I hearing that correctly? That sounds like, okay.
Yes. Yes, because you know, I always bring the thought to mind that Congress set up this tax code, 1912. Who did they set it up for?
Not for us.
That's the answer.
Mm.
And so a lot of other cultures, well, white folks, they use it as a way to get themselves out of that bankruptcy, build their business back again. They borrow that money and they don't have to pay it back because it's leaned against your death benefit. So if you pass, they just pull it out of your death benefit. But we teach you how to build a policy so that your policy grows every year. See, there's a lot of times we've been sold policies that if it's $100,000 now, it's $100,000 20 years from now. But with a few components, again, customizing and maximizing, we teach you how to build policies that grow. Because it's my idea, and that's what my article says, it's the real wealth gap closer. And it's primarily because it's a contract. And yes, if we've gotten a little in our age or our health does not allow us to get the right types of policies, we have to teach our young adults. Do you know that you can put a policy on a baby as early as 15 days old?
Wow.
15 days old. And I'm not talking about the Gerber policies that I know a lot of you ladies that have children may have been, proposed, early on. But I'm talking about policies that can grow, that can help a child with college, buy their first car. And one of the things the reason why I'm so passionate about this is because, again, yes, we have been destroyed financially in a lot of ways. Real estate, stocks, just, taking our wealth from us in years past. But again, once you get that contract set in an insurance policy, as long as you know the components of it, they have to pay it. It goes to court if they don't. A lot of the rating issues that we had early on were defined in court. Every insurance company has to be licensed in every state of the country to do business. So if you got a policy with Prudential and you live in New Jersey, they had the license in New Jersey. Like I have to have license to do business if I want to do business in New Jersey. These kind of things about this particular, again, contract have to be understood, because if you're going to pay something for 50 or 60 years, longer than a mortgage, to me, I call it the longest contract that exists. And a lot of times we end up dropping it. We don't have the right policy to begin with, so it doesn't pay out. There's certain circumstances that we need to understand about these policies too. Like when you buy a policy on your children and you're the owner of it, your child is the insured, you're the beneficiary. There's three components to it: the owner, the insured, and the beneficiary. Most time the owner and the insured are the same person. But just in case you bought policies on your kids because your grandmother and your mother bought policies, and a lot of times those are the kind of families that I meet, that they have an understanding of it. They may not have the right policies or policies that are as efficient as they could be. But if the mom owns it and the children are the beneficiary, and the mom or dad is the children are the insured, and the mom is the beneficiary, You must change that ownership before the parent passes away. Make that insured the owner, because the owner of the policy dictates who can pull the money out. The owner of the policy dictates who's the beneficiary, not the insured. And these components are some of the things that we can miss. And you put money into a policy for 50 years, and that ends up, messing up the contract. This is why I always say it's so much better to know what to do with the money you're making, because you can put money in these policies and it sit there for all types of reasons. I have clients who are buying their next vehicle with their policies. Why? Because they control the loan. They have a policy that, my phone's acting up. They have a policy that has enough money in it versus going to the bank in an economy where maybe the interest rates are high, and they borrow their own money and buy their car, and then they pay them their policy back. I have clients who use that money to invest in inventory for their business. I have, it's what. So this is another book I want you guys to know about. It's called Becoming Your Own Banker. And there are a ton of YouTube videos with the author's name on attached. R. Nelson Nash. He's just passed away maybe 2 years ago, but here's the author. And he came up with how to use these policies while you're living, how to strategize them. All our families need to understand this, how to use them. This book, I have an ebook and we'll give it to whoever. It's all about what the Rockefellers did.
What's it called? What would
the Rockefellers do?
What would the Rockefellers do?
They've changed the name of it, but brother, I can send you the ebook and you can pass it around to everybody.
Let's do that.
Yeah.
Let's do it.
And so these are the kinds of things, and he's saying my book as well, but these are the kinds of pieces of information. I have a 20 book resource guide that I send to my clients, because again, I feel so endeared to this because we've been so miseducated about it, and it's not our fault.
Let me ask you, because I just love to interrupt people.
Yeah, no, I'm good.
Just kidding. What about if you're already retired? What about people that are already retired? Do they get insurance policies, or what's the best, or maybe that's not the right word, but how should we look at that?
Well, again, insurance is based on age and health. I got my mother her first policy at 68. So it really is a individual personal situation. And just like if you think about business as I learn it today, the question you have to ask yourself is what's the end game? What are we getting it for? Quite frankly, my grandmother, when she was in her 80s, late 80s, she passed in her 90s. Because she came from that era, Mississippi and Arkansas, where she said, I just need some insurance. Baby, can you get me some insurance? I said, Grandma, you beyond the age. After 85, the insurance companies probably won't insure you. If they do, it's exorbitant, because remember, it's about life expectancy. So we start looking at who in your family needs to have their finances put in place. Because in my own personal opinion, generational wealth is based on the generations coming after us. It's not based on, they're coming after us. So they need to be solidified financially so that they can assist you as much as they can, versus what has happened in a lot of families is they're left with what they call in my industry bills and burdens. So we're trying to just fuse this whole process. Maybe you can't, or maybe it doesn't make sense to get you a policy when you're retired. But, you know, the thing I try to explain to people, there are 830 companies that sell life insurance in this country. Most of us just know the companies that are advertised on TV. And I said, how many Black companies still exist?
You said 2. You know, since you mentioned that, are you familiar with the story with Golden State Mutual?
Yeah, it's on this article that
Is that right? Is that right?
Yeah. That's funny you brought that up, because these are the articles that I read. They talk about it right up here. See that?
Yeah.
The largest Black owned. They're out there in California, right?
Yes.
They see the one Supreme Insurance is in Chicago. The building still exists on 35th and King Drive in Chicago, but there's no more insurance company there. I took a picture in front of North Carolina Mutual last fall in Durham. The building still exists, but the business is not there. But this article talks about, you know, Los Angeles, you know, talk about how they got started in a one room in a building. You know, insurance is literally a promise to manage your risk in case something happens. And these companies take in premiums, they evaluate you so that they will continue to take premiums in, which is what we pay to build up these coffers. They also invest in the communities. So when we have 46 companies, over $1.6 trillion in policies, and maybe we didn't have them, maybe they were copying what they saw, but they were trying to help us get better rates than we were getting anyway, and that's what's been written. The idea around that is, you know, it says even they had offices in 14 states with over $4 billion in policies, just that one company. You know, the idea is that this is still significant. And you know, I always say this now, you know, maybe I get real idealistic about it, and sometimes I'm optimistic about it, but what I know is that when you get the policy, when you sign for it and start paying it, it's yours. All you gotta do is meet your promise. That's the way we can close the wealth gap, because if we buy the right policies, it will then pay out. They have to bring you a check or your family a check for $1 million if you have $1 million policy with no taxes on it. With no taxes on it. Or you can point your policy to your trust. You can point your policy to your church. You can point your policy to your school. After you've used the money while you're living, which we show you how, and it shows you, talks about it in these books, you can point the balance to your organization. The Wosay community can be benefited from an insurance policy. If there's a nonprofit, that's why these are contracts. And these contracts will allow you to do a lot of things, a lot more than just bury and funerals. I came up with a strategy to share with my school, Morehouse, because most of the HBCUs, as you guys probably well aware of, the biggest issue is alumni donations. I came up with a strategy to teach 22-year-old graduates how to buy policies. and build cash in those policies that they can donate money back to the school in, because all the schools need is participation percentage increase.
Let me ask you, Brother Stephen, is
sir.
that in your book?
No, but I have a PowerPoint that I would share with anybody.
Yes, because we have a school in Oakland, and that would be a good way for people to donate to the school.
Yeah, it's a 360-degree plan, because if I build a policy for me, now I'm winning because I got a policy at 22 or young. Now I don't, it's not a challenge because I'm not older. If I take a little bit out of the policy and donate to the school or to an organization, that's a loan that I take that I can put back into my policy. It's not coming out of my bank account. And I'll share a secret with you guys that I've gleaned. Insurance companies, the reason why they've existed over 150 years is because they want to sell policies. They don't exist based on just their investments alone. They've accumulated billions, but they want to sell policies. So the more policies Morehouse can attribute themselves on buying with their alumni, the insurance companies will fund and sponsor and donate money to that organization because they operate on performance. If my company sells millions of dollars worth of insurance, I can ask them for marketing dollars to get the word out more because they want to sell insurance. That's what I'm trying to help people understand. Yes, I'm sure some of these companies are discriminating. Yes, they still, we're getting smarter about building policies that go into the millions. I have a dentist that builds a policy with $12,000 a month, and they see that, but at the same time, they're greedy. Mm-hmm. They want that money. I tell anybody, I say they don't need our money, but we need to learn how to manage them and customize them. Not using the word wrong, but, manipulate the process so that we have these policies, these contracts, so that they can assist our families in growing. Our Black insurance companies had $1.6 trillion coming in, in the policies, there's less of amount going in premium dollars. But those policies would represent who would have been the beneficiary of these $1.6 trillion of policies by Black companies selling to Black people, who would have been the beneficiaries into the next generation. I read an article that said, and I'll end with this, and anybody wants questions, they can definitely ask me. Recently, there was an article that said insurance companies paid out over $100 billion, $100 billion with a B, during the pandemic. Very logical because, whatever the case may be, we believe all these people passed away for whatever reason they did. But if they had insurance, the insurance company had to pay because they did not have an exclusion for coronavirus or any type of scenario like that. So when it come down to it, did we have policies to get paid when our ancestors passed away during that time period? That's my position on it. I appreciate you guys' time. I hope I wasn't too.
We go to 6:30. So
really? Okay.
Yes. So
okay.
You start time. I'm gonna end your screen just for a minute.
Okay, please do.
And we have a hand up from the man that went to Dunbar High School. All right. Go ahead.
My brother, this is a fantastic, beautiful presentation, and I'm definitely going to need your phone number, email, and whatnot, because I want to get you in contact with my daughter. Because as things stand, when you talk to your children, they don't listen to you, but if someone else say it, then they can hear it.
I know.
Because as an example, when I was in the military, an old sergeant pulled me off to the side. He said, young man, I want you to get some life insurance. Initially, I laughed at it. I said, yeah, right. Why I need insurance? I'm gonna live forever. You know, I'm in Vietnam now, so hey, I ain't worried about a thing. Well, anyway, long story short, I did invest some money in a whole life policy that I received money back in. And so as a number of years went by, it kept building up. And so after a while, I found out how much money I had. So I said, how much money can I borrow off of this money? Then he told me a number. I said, oh. So make a long story short, over the years, every other year, I go on a trip. But how I fund that trip is by pulling money out the insurance policy, go on the trip, have a ball, and not worried about interest rate and all this crazy stuff. Every other year, I go on a trip, pulling money out the life insurance. So, if I said that to my daughter, she ain't gonna hear it. Right. But I'm gonna get your number so I can let you talk to her about what you can do, okay?
I'll do it. You are a testimony. You are a testimony. And I've only talked to so many people that can testify that that is the actual case. And, you know, it's a contract. And it's going, whatever you signed, whenever it was in the 60s, the 70s, I don't know what year it was, brother, but it has to do what it says. Because it's a contract. And even if, check this out, even if that company goes out of business, let's give an extreme case. Because some of these companies go out of business, some of the smaller ones, people buy, other companies buy those policies, like they buy mortgages. They buy them. Right. And so when you call that old number, that 800 number on your policy, if it was Monumental Life, now it's something else. They'll answer the phone and they'll pull up your numbers.
Yeah.
Because as long as you make that premium payment, that contract is yours.
Yeah, but the other thing he said to me was that make sure whatever company you use, make sure that they have an office in New York. Because if they have an office in New York City and whatnot, they got some, the insurance regulators there are tight on it. And so if someone try to flam you, the insurance commissioner there in New York will take care of it. So I made sure when I got this company, I made sure they had a company there in New York.
Very good. And every state has a commissioner.
Yes.
So, you know, but that's powerful. And, you know, again, I go back to the why that started just kind of bugging me in my spirit. And it was just, they benefiting from this. Why? What's wrong? And I know what was wrong in the beginning. It was racism. It was systemic. And that article that I showed you, we'll talk about it. You know, they made us substandard because they killed us. So you can't get $1 million worth of insurance. You know, people talk. It just gets me because it's like now, like you said, I love to talk to your daughter because now the information that I'm talking about is fact checkable. And that's not a word, but you can Google it. But we don't, because insurance is a habit formed process. It took that gentleman for you to say, okay, I'm gonna try this. And everybody else that I've talked to that had certain types of policies, somebody, a classmate of mine, mother, single parent, worked in a Jewish family, with a Jewish family. The mother told her to get a certain policy to take care of her kids. That policy paid for my buddies them to go to Morehouse. And this is in the 80s. So sometimes, it takes, you know, we don't get the information, they kept it from us. But now the information is available and all I'm doing is just trying to share it. And I don't, you know, everybody doesn't do business with me. That doesn't bother me. But I know that these contracts work and the stereotype has to be changed. And we got to think about them differently with our stocks, with our real estate, with our cryptocurrency, if you're a cryptocurrency person, with everything, because it has a place.
But see, why I was negative originally about insurance was because this man used to come by, I'm not sure it was every week or once a month. My mom would pay, I don't know, 50 cents or 25 cents or something like that. And I said, oh, this got to be a sham. But, you know, so that's why we got negative about it, because of the experiences my mom went through.
Right. And that's
Every
why I'm going
month.
to send that article, because that's what I know. And that's what most of us know, especially if we came from the South, is because that was called debit insurance. It still
Right.
exists today.
Yeah.
Where they come by and pick up the money.
Yep.
In Louisiana, it's notorious, debit insurance.
Right.
But the policies are $500, $1,000. You know,
Right.
they're these little, my grandmother had a $500 policy on all her children, my mother and all her brothers. What was that gonna do?
Right.
Just bury you, or even just maybe buy a chicken dinner? It was not designed for us.
Right.
Across town, you know, I can show you examples of white families who were buying insurance. This one white family bought enough life insurance in the 1800s through their business that when the stock market crashed in 1929 or 32, whatever, the first stock market crashed, they borrowed $2 million out of their policy and bought all the businesses and everything in the 1930s.
Whoa.
Yeah. Wow.
So just think about what that $2 million represents today. And that family, 4 generations later, their name is here in Colorado Springs. Their name is on an auditorium. They own a bank. They own an insurance company. And guess what? That patriarch's picture is probably right where I got Marcus Garvey's picture in everybody's house.
Right.
Because he started that. Go ahead.
Let's move on. Thank you, Minister Shango, for your question and dialogue. That's a very good point. Brother Keaty has his hand up, and Brother Keaty, why don't you go ahead?
First of all, I want to congratulate you. An excellent and inspiring presentation today. You're very well informed, and as your exchange or dialogue between yourself and Brother Shango illustrates, when intelligent people get together with intelligent people, our ears pick up. We salute you all.
Thank you.
I just want to ask, mine's a fairly simple question. We do know that one of the things that burdens families and family finances is poor health. It's often said health is wealth. Well, the opposite, poor health is poor wealth. Are there any insurance policy strategies that you're aware of that reward people who have an easily verifiable tremendous health regime and protocol?
Man, thank you. Thank you. Because I find that, 100% of my clients are African-American, my people, 100%. I can't get other cultures to buy from me. Maybe it's my spirit, I don't know. So I had to pursue that finding, because what's indicative in our community? Blood pressure, diabetes, kidney disease, all these things. So for me to make a living, I had to figure this out. And what happens is 2 things. There are companies that focus on what they call less than, I forget what they call it, but health challenges. There are companies that focus on, and remember I talked about 830 companies that sell life insurance. Some literally, that's their only focus. See, if you go to the advertised companies, State Farm and Allstate, and I'm gonna call them all by name, they sell auto and homeowners and all this. There's some companies that just sell life. So they're set up to evaluate your health. And the major strategy that I employ is called pre-underwriting. Pre-underwriting. So I take an application and fill it out. And we don't submit it. So I'll tell you guys some other things. We don't submit it. We send it in for the underwriters to evaluate it pre-application status. Then they will tell me how many companies will accept that risk. or if companies won't accept it at all, I'll send it out to, like a broker does with your mortgage. I send it out to a bunch of people through my channels, and they'll say, yeah, we're okay. Send it in officially. Because what happens with insurance is that they keep data. They keep data. They know when you're applying for insurance with other companies. They know your health record if you're on prescription drugs. They know if you. I tell my people all the time, don't get the prescription if you're not going to take it, because it goes into a database. Just don't get it. Just be strong enough to tell the doctor, I'm not going to take it, because you're going to have to explain it if you're getting insurance. And all this health records are computerized medical records now anyway, so they just push a button and find out everything they want to know about the risk of writing insurance policy on you. So you're right, Brother Keaty, there are ways of figuring out, will your health meet the criteria? There's some health criteria that are just an exclusion. Still HIV, still, kidney transplant from a cadaver, but not kidney transplant from a live donor. So there's some fine lines around certain issues health-wise, and that's why I'm independent. That's what I go through with the clients. I don't just say, let's get your application and put it in, because if you get too many declines, that comes up on your record too. So it makes them concerned about, well, shit, he already got 3 declines. Well, explain that to us. And I know for a fact that underwriting with these companies also has I hate to say it, but it's interesting enough, has a position of subjectivity included. Somebody's making a decision, final decision. If you got these, you're right on the cusp. And it's a lot of times, it's not just based on you. It's based on the company's overall revenue. They said during COVID that, okay, we're not going to take people 75 years and older until this thing there's a handle on it. They can change their underwriting criteria because it's based on how much money is coming in and how much money is going out based on claims. They have to have a balance of dollars in those companies for them to be solvent. Because a lot of those companies pay stockholders. And a lot of them actually pay you in dividends if they're mutual companies. Mutual companies, Golden State Mutual paid dividends. Policyholders, New York Life pays dividends, Mass Mutual pays dividends. My companies that I use, Lafayette Life, Penn Mutual, they pay because you're the owner of the policy, and that makes you an owner in the company. Most of these companies have been paying dividends for over 100 years. They haven't missed. What's happened over 100 years? Stock market crash, all kind of recessions, wars. They still paying dividends through all that, because that's the way that industry is designed.
Very good. Thank you for your response. Very well informed, and I did take some notes I'll be able to use.
Yeah.
Thank you, Brother Keaty. Sister Judy has her hand up. Go ahead, Sister Judy.
All right.
Well, oh my God, Stephen LeBroi, I am so happy that you have come as one of our guests. I've been knowing Stephen for about 12 years now. He's a partner with my partner, JD and Shills, and I know a lot about this when I listened to our financial advisor presentation maybe a couple of weeks ago, and I didn't hear anything about whole life insurance. I was like, that's what we do. and JD's company is bankandgrowrich.net. And so what I wanted, this banking thing, JD just did a presentation, Stephen, at the Natural Hair Show on this past weekend. And one of the fascinating things about whole life insurance and you may have to correct me if I kind of always tell people this, that sometimes it's not exactly right, but with whole life insurance, you can use, it's almost like creating a legal tax shelter, because you are able to put money in. The money is not, when you're filling out applications and you're having to put income, I don't think you have to count the money in your policy as income. Is that correct?
No, not the money that's growing in the policy. It doesn't get counted. I mean,
Right. And also,
it's literally outside of the tax system.
right. Plus, it's tax-free. So what a lot of people do, especially people that are in business, contractors and construction companies, they can use this money and you can get it out like within 48 hours. You can take the money out. There are no penalties like with 401ks and 501(c)(3)(b)s and different things. You're able to use this money and have access to it, never have to report it as income when you're totaling your income, and it's tax-free. So I always think of it as kind of a legal tax shelter. But what I wanted you to just share quickly, I know JD mentions many times that he gives examples of these big colleges and universities that they own hundreds, and banks, and they own hundreds of whole life insurance policies. Can you kind of elaborate on that or give examples? Because I think that's pretty powerful.
Yeah, it just depends. For example, I read about LSU used to put policies on all their freshmen. Even when I was in school, unfortunately, some students passed away, but they would put policies on their freshmen. I don't know the particulars regarding the policy, if the families were a part of the beneficiary, a percentage of the beneficiary, but there's all types of configurations, because remember, these are contracts. Walmart got dinged for putting insurance policies on their employees. There's all types of scenarios that insurance companies play. A lot of people that have jobs have group policies. And, then you get a policy if you were part of a credit union. They send you something to apply for a policy in the mail every week. Insurance comes in all different types of forms. We have to, as clients, as customers, have to know exactly what we are buying. And Judy is right. There are all types of provisions with policies, but always remember, every policy is different. It's different. When you buy a policy 10 years ago, they've changed some of the terms because of what their business is going through 10 years later. So life insurance is not a commodity. And even the withdrawal of the policies, every company has different rules. That's why, when somebody says, well, I got a policy, it does this. No, let's read it. It's a contract. Let's see what it says. Because it may have some provisions that you haven't paid it. That was the same problem with my term policy. I didn't read it. I was 33 years old. I bought it $23 a month, in great shape. I didn't read it. And in 2008, the major component of the policy expired, which would have allowed me to convert that policy into a permanent policy. I could have kept it. I looked at the policy in 2010 and I missed it. I can't go back and ask for forgiveness, because that is a contract. It was a provision in the policy that they showed me from day one. But if we keep them, in a safety deposit box in our file cabinets, we just pay, and we don't pull them out once a year or every now and then and review that. One thing we're going to always do is age and we may not be eligible to replace that policy with something comparable or better.
I just wanted to add, and correct me if I'm wrong, my understanding is wrong, but also one of the advantages to the whole, that I understand with the whole life insurance policies are, if a lot of, and I think you sort of mentioned this, but a lot of times in our communities, as Stephen LeBroi mentioned, there's a lot of people once they pass 35 or 40 that have health issues. So if you have health issues, my understanding is this whole, you can be the owner of a policy and you can insure people in your family. I know you mentioned that on a baby, but you can do that with your adult children as well, right?
Yeah, they're again, all these companies are different. They have different provisions. What I've seen mostly is that, you know, well, here's the term is called insurable interests. You have to have insurable interests in an individual, which means simply that I just can't go around and insure Judy because I don't have an insurable interest in her, because they try to guard against people from being nefarious. You know, that's why they bust some of these people who, you know, build these big policies, and next thing you know, somebody comes up missing. It's investigation even on the claim side. But for young adults up to about age 25 is what I've seen, that you can actually insure your child. Or if you're a guardian of a person, you can insure them. You gotta show guardianship paperwork. You know, if you're trying to insure, you know, there have been studies that show Hispanics and Jewish people insure their elderly. All the kids get together, and maybe it's $2,000 a month, but all the kids pitch in, and maybe that's going to get them $100,000 or $200,000. And they also have assessed that life expectancy. You know, sometimes that may not work in our community because we don't think of our family members like that, but their elderly say, yes, put the insurance policy on me so my family can survive going forward. They're all different types of scenarios. We just have to be able to absorb them and sit down and understand this is a contract, and we can put that in place as long as it's being able to be underwritten. And one of these 800 companies or companies out there accept us. And then we go through the process of trying to strategically benefit from it, you know, as a part of our legacy, a part of our, you know, life expectancy. You know, people see on TV now how companies are buying life insurance. How many people have seen life settlement commercials?
Yeah.
Yeah, we even buy your term policy. These are companies that assess how much more life you have left, and they give you cash for your policies above the cash you would get if you turned it in back to your insurance company. And again, I know we're not no spies, no moles on here, because I'm giving you guys stuff that as a licensed agent I'm not supposed to say, but these are companies that I tell people, you know, my folks, you got 2 or 3 policies, you need some money, sell a policy.
Let me add this, Brother Stephen. You know, this program will be up on YouTube, and hopefully that'll be all right with you. You know, it's going to come out in a couple of days, so just.
Oh, okay. Thank you for saying that.
Just so you know, I don't want you to reveal things.
Yeah, I forgot. I got carried away.
No, and we see from your bio, it says you're passionate about it, and you certainly are. And I think that is picked up by everyone on this Zoom meeting, because the comments that have been put in the Zoom about that.
I was laughing. I said, this recording will burn up like the Mission Impossible as soon after you hear the knowledge.
And that's one of the reasons why I'm independent. So, you know, I tell my truth. and whether hopefully they handle it however, but our people have been except for my brother here who's using his policy, have not been privy to a lot of these things going forward, and we need to help our young adults, our children, because again, I believe that generational wealth starts backwards, and I've even understood how you can build policies and put in your trust and let your trust dictate that policies be written on your unborn in
Wow.
perpetuity.
Wow. Wow.
So the money goes into the trust, utilize it for purposes for your family, then it can go to build more policies to guarantee that the message continues to go into the future.
Wow.
And those are things that I'm seeing that I want to make sure that we know.
All right, we have about 10 minutes left. And are there any other questions? So much good information today. I just received a note that someone has sent you an individual email, and looking forward to your response to that, Brother Stephen.
Okay.
And right now we have Sugar D. She has her hand up, and go ahead, Sugar D.
Excellent. I really thank you for all of the valuable information. I just want to know, how can I get with you so I can get myself straight for insurance? Some things that's happened in my life that I need insurance, and I'm ready.
If you guys want me to put the information in the chat,
Yes.
Okay, I can do that, and you can copy the chat. I'll give you my number and everything here. And
thank you so much.
I'm just gonna, I don't know how I'm typing it, but I'm gonna put it in there for everybody, my website and everything.
It looks right.
Okay. Yeah.
Do you do house calls too?
You in DC, I'll come see you.
He's in the Bay Area, man.
No. I'm in Oakland, California.
Oh, yeah. The irony is that I do have clients in California. So, let's do a Zoom and see how we can set something up.
Sister Judy, you have your hand up. Go ahead.
Yes, I was thinking also, and I'm still getting clarity, but as far as answering Minister Imhotep's earlier question about retirees, a person retired getting an insurance policy, why? Would it be one of the reasons be also what we just talked about, if they wanted to, say a person is uninsurable because of age and or illness or medical conditions, can they still take out a policy on one of the children that's insured interest and just become the owner without being healthy? Can an unhealthy person own a policy and insure someone and be the owner and have access to? Once you're the owner, you have access to the money, right?
To the money, right. That's another strategy that I share with my parents who maybe you have group insurance at the job or have smaller policies, and we can figure out how to put insurance on your children, grandchildren with a signature from their parent. And a lot of people will do that. They will use that money, tax-free money in retirement, and then they'll just pass the policy back to their family member. Sometimes I've even seen parents will give their children the policy and it had a loan on it. Because it doesn't matter. The child can pay the loan back and still have access to tax-free money. Because the policy will still have a death benefit will be on the child. We can go over all of that. These are the strategies that we try to help you build, because a lot of times we just look at insurance as a one-to-one. I got to get it on me, you know, my kid's the beneficiary, and it doesn't always have to play out like that.
I think that was the most exciting thing for me as I've been learning about whole life is that in our community, if only we knew, because there's so many people in our community that are now uninsurable, but knowing that they could, you know, be the owner of these policies and put it on their children and still have access to all the money and hold they're the owners until they turn it over to the children. I think that in itself would just bring our whole community up if we knew that.
Just another way. These are contracts, and they are, you know, they have a way of managing what comes in, and sometimes I have to go back and forth with them, but you know, I'm learning more how to build these contracts so that we win, you know. And what I always say is that, you know, the more we put these types of contracts in place, our culture begins to win in terms of having access to capital going forward. And that is a huge factor as we go into the future of all this technology and all the stuff that we're, you know, dealing with. It's like, how do we manage that? Now, yes, like I said, we participate in the investment market. We have to, but insurance policy don't go up and down.
I want to thank you, my brother, for coming to us and sharing us your knowledge. Let me share some things on my screen here. So this was our flyer. Oh, you know what I need to do? I need to go here. Never mind. All right. So
Bayless recently admitted something, of course, that I
just want to here is our brother here, and the name of his book is Building Your Human Equity Line of Credit, and he put the information on how to get it in the chat. What you can do is save the chat. You'll get, you know, when you do that, just click on those three dots and save the chat, and you can look at the comments, and I also put the article about him in the chat as well. Next week, we're going to be going to Cuba, and we're going to be talking about you know, the way that we can get aid to Cuba and what's been going on there. Sister Isata left, and she could really explain this better, but next week we hope that you will join us. We're going to talk about the medical resources that have been coming from this country going to Cuba, people that are volunteers, Pastors Without Borders, etc. And then in 2 weeks, our brother Keedy is going to be with us. And Keedy, what are you going to be talking about in 2 weeks? Take yourself off mute. Take yourself off mute. Take yourself off mute.
We are going to be talking about how we become so incredibly healthy that the very lessons we learned today will be ours to access and benefit from. We have a program and it works. It really, really is exciting to be incredibly healthy. I have 7 new books out for the new year, and we're going to focus really on the health books, but I also want to talk about how does a person get 7 new books out in 1 year. Part of it is being extraordinarily healthy.
All right.
And not only 7 books in 1 year, but 7 books in 3 months.
My goodness. You got to be healthy to do that. Also, on a sad note, for those of you that are part of WOSE community, particularly in Oakland, Minister Malley's sister passed away, and her homegoing services will be this Friday at Fuchsia Hudson's Funeral Home in Oakland. and the repast will be at the Hiram Hall, Capwell, 8105 Capwell Drive in Oakland. So if those of you that would like to support Minister Malley, or you could just give him a call or a text to just let him know that you're with him and that you're supporting him. All right, and then I think I have one more thing here. Oh,
And
yeah.
could I just add a compliment to that before you have your close?
Yes,
Is that
sir.
of course we acknowledge the transition to ancestral realm of our great now ancestor Harry Belafonte,
Yes.
the illustrious Mr. B. I
Yes.
don't think any one of us in this group has not had our lives and our spirit touched by this great man. And I'm trusting that you, Brother Minister Imhotep, and other members of the Ward State community got a chance to be in his radiance. He was an incredible man.
Very, very a giant. A library has closed. Thank you, Brother Keedy, for mentioning that. Also, this coming Sunday in Oakland, Minister Makalisi will be traveling. He's already here from Virginia, and he will be at Holly Street, 8924 Holly Street, celebrating the worship service there this Sunday. And also, it is Biko Sunday. So next Sunday, it's going to be focusing on the children. When we have Biko classes, instead of saying the old Sunday school class, we call it Biko school. So that will be happening this Sunday. All right. I want to thank Brother Stephen LeBroi. Let's take ourselves off mute and give him a hand clap. Let's let him.
Ashe, yo.
Thank you,
brother.
Knowledge is
Thank you.
Oh,
It was good. I
knowledge is
appreciate it.
power.
Thank you. Thank you. Thank you.
Right. All right.
Great job.
All right. And thank you, Sister Judy, for turning us on to him. And we're certainly glad to I don't know. It was just such a rich experience. Thank you so much.
I want to recognize my classmate, George Britt. He got a picture of Dr. Benjamin Mays
Oh, wow.
from Morehouse College. So he's a pastor. So he sat in. So just wanted to.
Thank you, Pastor Britt.
Thank you so much. I've been listening, and it's been very informative and inspirational. I'll be reaching out to you, Brother LeBroi, and thank you, brothers and sisters in California, for what you're doing. It's been very, very enriching. Thank you.
Right, and even though we're just meeting you, I'm sure that you're doing great service for our people as well.
Yes, thank you.
All right, with that, we're going to conclude. Thanks again, everyone, for coming. This will be up on YouTube in a couple of days, and so we can listen to it further. I took some notes here. I just want to go over. He told us about ending Jim Crow life insurance rates by Mary Heen. Was that right, Mary Heen? And then he said, money, wealth, life insurance, risk management. He mentioned that. He said, Becoming Your Own Banker by R. Nelson Nash. He also mentioned the book, What Would the Rockefellers Do? I used to, my grandmother growing up, she used to always talk about the Rockefellers. You know, she was a Rockefeller. And then he also said there's 830 companies selling insurance and only 2 are Black owned. My goodness. And then he said, insurance exists because they want to sell policies. Insurance companies paid out $1 billion during the pandemic. And he also talked about pre-underwriting. Thank you again, Brother Stephen. And maybe this won't be your last time joining us. And I'm sure people on this Zoom and others that see it will reach out to you. Thank you again.